What's up, guys? This is Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall markets and why there's likely going to be a buying opportunity coming based off the charts we're seeing and based off many other factors. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. So, as far as the market's going, ever since FOMC and the time that President Trump and President Xi Jinping of China had met up, the market has been on a bit of a downtrend. SPY has been making lower highs and lower lows, at least for now. But what happened to the November rally I was talking about? And the answer is that we mentioned that the market was in a very, very nice rip and to expect some upside approaching a lot of these meetings. However, with the market dipping like this is nothing more than just a temporary dip for an opportunity. The market did not dip much, and I think the downside is going to be minuscule compared to the upside that is about to come based off a lot of different factors out there. So let's break down exactly why the market's pulling back and why many very, very awesome indicators suggest the market will likely see more upside in the upcoming months and why I think that this will be another opportunity. So first and foremost, looking at the technicals on SPY, on the daily time frame, there's so many gaps left. We got this massive rally for the last couple of trading days, which took the market to new all-time highs, which shows the market has the potential to break out still, but we were not able to essentially continue to hold at those levels. The market started to reject a bit. Now, it's very healthy for the market to come down because of so much upside. And I would love to see these gaps get filled because this will likely be another buying opportunity. Same thing with the QQQ. We rallied very, very hard. We saw a massive pump, but there's so many unfilled gaps. So if the market does come down to fill these gaps, I believe this will be a very, very good opportunity. And there's a good chance of that happening. Let's break down exactly why that is. In this video, I'm going to be using the tool known as Forecaster, which is very awesome for looking at data and using it to forecast what the market will likely do. And using these very cool visuals, you guys can see what the market is going to likely do. So when we look at the QQQ, for example, we're in a very, very interesting phase right now, right? There is some risk of the QQQ dipping a bit lower, according to this, back down towards that 615 area or even lower than that. But even if that's the case, 2 out of 3 scenarios suggest that if we get some kind of pullback, this will likely quickly get bought back up and we could continue to break all-time highs by the end of the month, right? That's one of the most likely possibilities, right? That's the bullish case. And we also have the best match case, which tells us there's still upside of 3.43% that is left. Now, why is it telling us that? Well, it's based off the historical data. We're looking at the data and extrapolating this and using this to look at what the pattern suggests. And the bullish case does have more merit based off that, right? There's more cases when the chart looked like this where it ended up just getting bought back up. Also, it's worth noting that seasonality at this time tends to be bullish, right? As the market is down in October, we tend to get completely bought back up in the months of November and December. If we go down here, you'll see that when it comes to monthly averages, the majority of the time in November and December, the stock market tends to be bullish. The QQQ tends to be bullish as well. So historical data, seasonality, and such, they're all telling us the same thing, that we do tend to be bullish during this time frame. And when you look at other indicators such as our advanced DPO indicator, there's no major sell signals yet on this chart. So there's no sign that the QQQ is going to dump super hard. This is just basically telling us that we're still on a nice uptrend. Even if we dip a bit more, that the advanced DPO still suggests we're on that uptrend. So that's a good sign, at least so far, for the QQQ. So why do I say this? Well, once again, these gaps could get filled and then we're going to likely bounce. But the question is, why are we dipping, at least for now? It's not just the QQQ, it's SPY that has very identical setups, right? The SPY forecaster projections are essentially the same. We could be dipping back down to like the 670 area. And then even if that's the case, 1 month out, we're still favoring. The best match tells us there's about a 2.69% upside move coming. The $700 price target will still be met most likely. This is based off our past correlated events, which suggest upside is looking stronger. Also, when you look at the market right now, we're not necessarily oversold or overbought. We're still neutral. There's no major sell signals on SPY quite yet based off the advanced DPO. And finally, when you look at the indicators, we tend to be bullish during that November and December period. So we're still in a bullish phase. This is nothing more than a buying opportunity. Historically, November is known for being a very bullish month for SPY and the QQQ. So why was the market dipping from the very, very beginning? Let's actually talk about that. Then I'll break down why we're going to likely get bought back up. Well, it's not just about looking at the charts and looking at historical data. All of this is very, very useful, but you also have to pay attention to what the Fed was telling us, right? Before, the market was very confident in the Fed giving us a cut. Then Jerome Powell came out and he gave the market a slight rug pull by saying that, wait a second, we don't really have that certainty. The market's not as certain about that, which is why the odds of us getting a cut went down to 69.8%. So with that dip that came with this, a small dip right over here, the market is now like prepared for more uncertainty, and the market already priced in the probabilities of us getting a cut. The market thought there was almost a 92% chance of us getting a cut in December. Now it went down to 69%. And that's why the market saw a bit of a sell off, alongside the fact that the market priced in the meeting between President Trump and President Xi Jinping. And with earnings coming out, we ended up seeing the market sell off a bit because most earnings did see some downside. So that's part of why the market sold off. But remember, simultaneously, the Fed is also going to help the markets pump because of what they're doing with their repurchase agreements. So the Fed understand that they can't just tell us everything's good, everything's going so well, and they can't just pump the market eternally. There's going to be times when they have to be uncertain. That's why the market started off with a dip. But in the back end, the Fed is doing something different, and that is they are transitioning away from quantitative tightening. And instead, they're going to be easing on policy. This is evident right here in their repurchases of treasury bonds and mortgage-backed securities. So right here, we're seeing a massive increase in what the Fed is doing. They're going to stimulate the economy because of what they're seeing on the unemployment end. And they're trying to do this to maintain their dual mandate. This tells us that even as the market is dipping, there's going to be more liquidity being drawn, at least by the Fed, and the Fed is going to continue to buy back securities, and they're essentially going to be turning on the money printer very, very soon, right, to help the economy catch up during these times. We're seeing unemployment increasing in America, and there obviously are some hardships, but once again, there's no confirmed recession. There's nothing that confirms that we're in a recession. So for now, the market still has opportunity to get bought back up. Now, am I saying that this guarantees that there won't be a recession? There will never be one? Of course not, right? It could still happen a year down the line. But as of right now, for the end of the year, if we get those dips, this will be a buying opportunity due to these factors with the Fed and our very, very useful indicators. Forecasters very cool for this as well, because the overall setups, when you look right over here at our projection indicator tool, this aligns with what tends to happen historically. On the QQQ, for example, we tend to sell off just a little bit more. We could sell off a bit more in the QQQ, and then we're going to likely get bought back up and continue to run in the upcoming months, right? That's the most likely possibility. The upside is very, very evident. And the same thing can be said about the SPY chart, right? The majority of our projections suggest that even if we dip a bit more, there's a good chance we rally towards the end of the year and we get bought back up. That's not just evident here, it's also evident on the charts. Let me just show you what I'm talking about. Every time we dip, right? Every time we've dipped this year, we just get bought back up. We dip, we get bought back up. We dip, we get bought back up, which is the definition of a bull market. The bulls are still in control. So a healthy dip would be very, very nice before we continue to get bought back up. That would be a nice buying opportunity. Same thing with the QQQ for now. Every time we dip, we just get bought back up. We dip, we get bought back up. We dip, we get bought back up. And if we dip again to fill these gaps, which I think is very likely, at least the first gap will likely get filled, then we could be looking for another big bounce after that. Another thing that's worth mentioning is that some stocks have a lot of opportunities, such as Nvidia. Nvidia's projections remain very, very bullish a month out, but for the short term, the next couple of weeks, there could be some downside coming because we have lots of unfilled gaps and also because of our overall projections. So let me just go to Nvidia over here. One concern I have is that we're making a lower high and there are a lot of gaps down here. There's a gap down here at 191, another gap down here at 185. And even if we don't go that low, there's still this resistance becoming support around 195 that will likely be tested. So there will likely be some kind of buying opportunity coming to Nvidia after just pumped so hard for the last couple of months. If anything, although it's more neutral, we did start to get a sell signal right here. So for example, as this was recommending to sell Nvidia, we got this sell off right over here that happened a couple of months ago before it started to rally again. And we're starting to see signs of that happening again, which could suggest that a bit of a sell off could be coming to Nvidia, which would be nothing more than a buying opportunity. So that's what our indicators tell us. Fundamentally, we can use forecasters to look at the fundamentals of this company. Its average fair value keeps going up, and this has very, very strong projections. And on top of that, Nvidia is known for having lots and lots of cash flow, lots and lots of growth. So it has strong fundamentals to back up the share price, at least as of right now. And the same thing can be said about Meta, which I think has a lot of opportunity. So right now, Meta is near oversold territory, and we've been dumping quite a bit. I think we're also going to get very close to getting a buy signal on our DPO. Our advanced DPO could start telling us to buy up Meta if this continues to fall because it's near that oversold territory and because the projections for Meta are quite bullish. The majority of projections suggest there's going to be some kind of bounce coming, and it's going to likely be running back to the $700 area by the end of the year, which I think creates another good buying opportunity. Because when you look at Meta stock, we just completely dumped after earnings, which is not the best of signs. Their earnings were good. It's just that they were taxed a lot because of their tax charges that caused their earnings to decline. And we're going to see how it ends up holding at this 650 area. If that doesn't hold, we could be dipping a bit more. I would not rule out the 620s, or even if it goes lower to fill that gap at 604. The low 600s tend to be good buying opportunities. Between 600 and 650, you could slowly dollar cost average because this will likely continue to bounce. And Meta is known for being a cash generating machine, right? They're known for generating so much cash, so much revenue. So this would be another potential buying opportunity. So one of the cool ways to use forecasters is that you could look at your favorite tickers like Meta, and you'll see that this is near oversold territory. There's panic selling. Everyone is panicking. They're starting to sell Meta like crazy, expecting this to crash. Well, as the saying goes, when others are fearful, that is when we become greedy. And you could see lots of nice opportunities by using this stock tool by using Forecaster, right? You could look at your favorite stocks like Tesla, like Meta, like Microsoft, and Amazon. You could look at other individual tickers. You could look at small companies like NEO, for example, and use this tool to understand if a stock is oversold or overbought and if there is opportunity in buying up a share or not at particular levels. So, with that being said, guys, I want to thank you all so much for listening. Let me just say that the stock market has risk of downside. There is a risk of us dipping a little bit more. And if we come down to fill these gaps and SPY in the QQQ, and if Meta continues to fall to like the mid or even lower 600s, it is nothing but a buying opportunity for the end of the year because I think there's going to likely be a big squeeze coming again, right? Every time the market's dipping, we're getting bought back up. And we're looking at lots of different tools and perspectives from the Fed to the current technicals. But I think the most important tool in this case is going to be Forecaster. Forecaster uses all sorts of different types of data when looking at data from the past to looking at projections. I think it's a very cool stock analysis tool for those who are interested. You could look at individual tickers such as Meta or Amazon or Tesla, whichever tickers you guys want to look at, and use that to understand if a stock is overbought or oversold. And then you could use that for, a very, very good indicator when it comes to investing, dollar cost averaging, and then looking at different tickers. So if you're interested in signing up for this tool to look at the fundamentals of your favorite companies, to look at projections, what AI tools are suggesting, and where they think a share price is likely going to go, I highly recommend this tool. I recommend this tool known as Forecast to look at these different stocks and to use it for understanding what's going to likely happen. So please use my link down below to sign up to save 10% on your membership. With that being said, please have an awesome rest of your guys' days, and I'll be back very soon with another update. Until then, I wish you all nothing but the best. Sign up for Forecast with my link down below, and peace out.